GM guys, GM. So today I'll be talking about highs and lows, basically highs and lows on the chart. Just before I start, I want you to understand that um basically these candlesticks languages are algorithm languages. Yeah, the algorithm language, just like we have Java, SQL, and whatsoever. So in the financial market, this candlestick, Japanese candlestick, are algorithm languages. It's the algorithm language, and for you to understand what the algorithm is saying, you need to understand what the candlestick is saying. And the algorithm is what moves the market. So if price is going up, you need to understand that. You need to understand that the algorithm is saying that price is going up. If price is coming down, you need to understand that the algorithm is saying price is coming down. And there's no better way for you to know if you don't understand your highs and lows. You see, even and I believe that among all the strategies out there, algorithm, the algo strategy, and the SMC strategy, thanks to Alchemist and ICT, who engineered SMC. So these two strategies are the strategies that best define highs and lows in the market. Yeah, they are the two strategies that best define the highs and lows. BTMM trades something like pattern wave, that kind of thing. ICT strategy does not really emphasize on highs and lows per se. You see, so we have a lot of strategies out there. Retail strategy, trade pattern does not really talk like emphasize on highs and lows. But SMC and Algo strategy basically is the only strategy that trades highs and lows. That's what they trade. That's just it. You need to understand your highs and lows, your strong high and your strong low, and yeah, that's basically it. Anyway, let's move on. So to understand your highs and lows based on structure or whatsoever, you need to first understand what a candlestick is saying. For you to understand what a complete sentence is, you need to first understand what a word is. What a word is, the meaning of a word. If I'm telling you, if I'm saying something like I'm going to the market tomorrow, yeah, it's easy for you to understand I'm going to the market tomorrow. But let us say you do not, you have deficiency understanding words or language sentence and the like. There are people with that deficiency. Well, you need to first understand what each word is saying, the arrangement of each word. I, that is myself, am, going, that's an action word, going, stepping out, doing something, living wherever I am, going somewhere. So, to the market, okay, that's where I'm going. Then tomorrow, that is when I'm going. You see? So, it is easy for us to comprehend everything together because we already acquainted, familiarized with the grammar and vocabulary. I'm going to the market tomorrow. But for someone who does not really understand the English language, you need to take your time to identify each word by their meaning, then group them together into a sentence to form a contextual meaning. You know what I'm trying to say? So basically, the same thing applicable to the Japanese candlesticks. The language of the algorithm responsible for market movement, price movement. You need to understand what each candlestick is saying, what each word, each candlestick is saying, for you to comprehensively understand what a group of candlesticks are saying. And when we group these candlesticks, that's where we get our structures, we get our ranges, and whatnot. So let's move. I hope with this little explanation, I'm able to let you understand why we are doing this. So let's start from here. It's nice BTC. We don't really have much price action presentation. So okay, so let's move. Let's do with what we have here. So this is on a monthly time frame, which means it took a month for each candlestick to form, which is nice. So basically, I need you to understand something. I mentioned highs and lows and prime numbers. What are prime numbers? Prime numbers are basically numbers that are greater than 1 and can only be divided by 1 and itself. So which means there are two ways to prime numbers. Prime numbers are not confusing at all. They are simple as numbers that can only be divided by itself and 1. 20, for example, is not a prime number. You can divide it by 5, you can divide it by 2. 11, for example, is a prime number. You can only divide 11 by 11 or by 1. So which means there are two ways to prime numbers. It's as simple as that. You don't need to rack your head. You don't need to stress yourself for it. Prime numbers are as simple as it is. So which means We have the same characteristics of prime number on candlesticks. On each candlestick, there are two ways to it, and they are simple as they are, which are we have the low and the high. As simple as it is, the low and the high. Let me identify this as based on candlestick. We are not trading structure. Monthly high and monthly low. Okay, good. Okay, good. So we have the monthly high and we have the monthly low. Sorry, I think the network is not really doing justice. It's not really smiling on us tonight. Today rather, so let's move. Okay, so we have the high and the low. Basically, that's what there is. Now I need you to understand this. This high and low, or highs and lows of each candlestick, is the same regardless of what type of candlestick it is, be it bearish or bullish candlestick. The high and the low remain the same. So that is why it is very much important to understand your highs and low, because even if the candlestick is a bearish candlestick, your high and low is the same. High and low. The high and low you know. The high and low you know. The high and low you are familiar with. So if the candlestick is bullish, the same high and low. The high is at the top and the low is at the bottom. Just as we have it, just like we have it here. The high is here and the low is here. Now this is a bullish candlestick. Let's see. We have this monthly low. Then we have this monthly high. Based on the candlesticks, as you can see, this is a bearish candlestick, the black candle, and this is a bullish candlestick, the white candle. But the funny thing is that regardless of the candlesticks, the highs and lows remain the same. So it's as simple as that, the high and the low. So it is when you understand the highs and lows of each candlestick, you will be able to understand and identify and make sense of a group of candlesticks. Yeah, okay, cool. Let's move on. So we have this low and we have this high. We have this low and we have this high. So do we want to pick our next high and low? Yes, we want to. Then we have this. Oh, we have this low. Hold on, please. Okay. So we have this low and we have this high. And we have this high. So it's as simple as that. So that's how we'll be going: low, high, low, high, low, high, low, high, low, high, low, high, low. Okay. So basically, speaking of each candlestick, it's easy for us to identify the highs and lows. We are good at finding the highs and lows. Okay, let's move forward. Now that being said, I'm going to delete this now, which I believe by now you already understand your highs and low per each candlestick, per candlestick. Okay, now let us talk about, now we've been able to identify I am going to the market tomorrow. We've been able to identify to know the meaning of I am going to the market tomorrow. We've been able to identify that looking at this candlestick, looking at this price action. We have this low, high, this low, high, this low, high, low, high, low, high, low, and high. Now, that being said, it is important for you to understand what a reversal is. A reversal is what makes you make sense of price action collectively. I hear a lot of people saying that they don't trade pullbacks, they don't trade reversal. Everybody trade pullback, everybody trade reversal. You just don't know it. We all trade reversal, we all trade pullback. Now, when I'm done with this, you're going to understand what I'm trying to say. Now, the reversal is what makes you make sense of all the sentence, the whole sentence rather. Be it simple sentence, complex sentence, or whatsoever. Now, here, there's a saying, the trend is your friend until it ends. Follow the trend. So here we have a low, we have a high. This is a bearish candlestick. Then we have another bullish candlestick, another candlestick forming, another candlestick formed. This is a bullish candlestick, as you can see. We have a low and a high. Now the thing is, this candlestick broke the high of this candlestick. Let me identify it. Hold on, please. So this candlestick broke the high of this candlestick. Excuse me, please. Okay, so this candlestick broke the high of this candlestick. As you can see, this candlestick broke the high of this candlestick. This particular bullish candlestick, it went above. That's what happened. Now, first, it must have occurred more than once or twice. If I say that, oh, that is the trend, that is what is trending, then it has happened more than once or twice. If it just happened once, if it happened once, then it's not a trend. It's not yet a trend. It's not a trend. So basically, price did what? This candlestick broke the high of this candlestick. This previous candlestick went up. Then this candlestick formed. After forming, broke the high of this candlestick also, as you can see. Now it has happened the first time, happened the second time, then you can start considering that's a trend. Then what happened next? As you can see, this low was protected. This low was never, price didn't come down, price didn't go below this low. That should be noted. When this candlestick formed also, price didn't go below this low, this previous candlestick low. Now, when this candlestick formed, this bearish candle is a black candlestick, so you can say it's a bearish candlestick. So when this candlestick formed, it went above this candlestick. As you can see, it went above it, leaving this candlestick low. You know, we've been able to identify the low and high, low and high, low and high, low and high. Yeah, we've identified our highs and lows and low and high. So basically, when price moved from here to here, the only thing we can say is that price kept breaking the highs of the previous candlesticks. Each candlestick continued breaking the highs of the previous candlesticks, leaving the low of the previous candlesticks. This high was being broken. This high was broken. This high was broken. Why this low are being protected or reserved. Now, what happened here also? This candlestick formed, did well, tried, came as low, came so close to this low, came as close as this, came as close as here, as you can see. So it was this close. Okay, sorry about that. So it was this close, as you can see. Sorry, okay, let me bring it here for us to see. Yeah, it was this close, but didn't take it out for some reasons. Yeah, there are no mistakes when it comes to AI. AIs, artificial intelligence, computers are not human who make mistakes or who deliberately do things just to satisfy their own to flex their free will. No, they don't do that. There are no such things as that, at least for now. So basically, for the algorithm to not take out the low, to leave this previous candlestick low, is deliberate. There's a reason for that. So price so far, price has been breaking the previous candlestick highs, leaving the lows. As you can see, price is the same here. Price came here, the same thing was done. So basically we can say that from here to here, from here to here, price has been going up, breaking the previous highs, breaking the previous candlestick highs. Nothing else but just continue going up. So from here to here, you can see that we're in an uptrend. Yeah, you can see that. Yeah. Now something happened, something different happened here. And what was that? Price came down. Price came below here. Price did something that has not been done before. That has not been done since the inception of this candlestick, since the existence of this candlestick, creation of this candlestick. From year to year, price has been breaking the previous candlestick high, leaving the previous candlestick low. Now, when this candlestick formed, price did what? Price came below this previous candlestick. Now, let's talk about the word reversal. What do you understand by a reversal? A reversal is simply you going the opposite direction, going towards the opposite direction. I'm trying to get the best um, grammar to use. A reversal basically is when you go to the opposite direction, to the direction opposite to the intending direction. What I just said, I don't think it really makes a lot of sense to a lot. It will make a lot of sense to a lot of people. Anyway, what I'm trying to say is, when we are talking about reversal, we want to see something like this. We want to see a movement from here to here. Yeah, price has been going here. Or let's say we are driving. We've been driving from this point, then we are going towards this point. When we want to see a reversal, we want to see price stopping a little, then moving back. Now the price has been going up before, then the reversal is when we go back a little, then we continue. That's basically what a reversal is. For those who drive or you've been in a car before or whatsoever, you understand when a driver reverses. For a reversal to occur, it means that the car must be on a particular direction, on a motion to a particular direction. You see, the car has a front and a back. So for you to say that the car is reversing, it simply means the car is turning, is going to the direction where the car is not facing. You get it? So basically, that is what a reversal is. Yeah, you can turn. There's U-turn, there's whatsoever, but basically what a reversal is when you are moving to a direction where the car is not facing. That's what a reversal is basically. If you are doing a U-turn, you are driving, you are facing a particular direction, you are doing a U-turn, that's, for me, I don't think that's a reversal. No, that's not a reversal. You are not reversing, you are just doing a U-turn. But when you reverse is when you are going towards the direction the car is not facing. So, which means, based on the candlestick, let's come back to this, to the chart, the candlestick. Let's forget the analogy of the car. Price has been going up. This is the direction it has been going. Price candlestick has been breaking previous highs continually until it came here. This candlestick formed and broke the low. Now, this is a reversal. This is a reversal, as simple as it is. Now, price could decide to do this reversal from here to come down here, or only God knows, You see, basically, as long as price took out this low, did something it has not been doing before, that's a reversal. Then after this reversal has been made, after this reversal has been created, we see price do what? Continue to the upside. Price continue to the upside. Now, once price continue to the upside, breaking this high, then you have your structure. It's as simple as that. Then you have your structure. Then you have price making sense. That is when you make sense of the whole candlesticks. First, we identify our highs, our low, high, highs and lows, low, high per candlestick. Now, once we have a reversal, once price, from year to year, price has been breaking the previous highs. Now, when this candlestick formed, it broke the previous low, which is quite different from what has been happening, different from the trend. Now, once this happened, once this reversal was done reversing, once price is done reversing, probably to here or wherever, as long as this low, this initial low is protected. So, once price is done reversing, and we see a continuation, price breaking this high, you know that this candlestick has a high and a low. Let me cancel this candlestick. Now using those. Okay. So once price was done reversal, and price continue breaking this. Here we have a high. We have a high here. we have a high here and we have a low here. So price broke this low, which was different from what has been happening, different from the trend. So once price broke this low, that's a reversal to the downside, and eventually price continued breaking this high. Now, once price break this high, that's a continuation of trend. That's a continuation of what has been happening from year to year. Price breaking the previous high. So once price break this high, then we have our low based on structure. Basically we've been marking our highs and lows based on candlestick, each candlestick, which is fine. Yeah, we need to do that in order to understand our pullbacks or reversal whatsoever. So once this is a low, high, low, high, low, high, low, high, a low and a high. Let me use the part to probably, okay, price move from a high, low, then we have a low, high, a low, high, high, low, high, low, high, as you can see. Then we have this low, then high. So let me adjust this. Okay, good. So as it is here, as you can see, basically this is all there is to it. The low, high, the low, high, then price broke this low. That's a reversal, then price continued. Now, before this reversal, we did well to identify our highs and lows based on each candlestick. Now, immediately we have a reversal. Immediately you have a reversal on your chart, such like this. Price going against the intended trend, breaking this previous low, coming down, then continue the trend. Then you have a structural bias. You are not going to narrate the market based on each candlestick. That is where you make sense of the sentences as a whole. So once there's a reversal such as this, then you want to be identifying your highs and lows based on the reversal, not based on high, low, and not based on low, high, low, and high anymore. Yeah, not based on low, high, low, high, low, high anymore. No, you want to start making sense of the whole chart based on the structure, based on the sentence, based on the sentences. So from here, this is how you are going to mark it. You're not going to mark like this anymore, but you start your marking such as this. So low, high, the point of the swing point of reversal, low, then wherever the high is. Okay, then high, as you can see. Then let's see. Okay, then okay, so as you can see, we have this. Excuse me. Okay, good. Then we have this. Then. So as simple as that. So first, we want to identify, to make sense of the whole structure of the whole candlestick, the whole sentence. We want to first identify each word, and that is we identifying the highs and the lows here. The low, high, and from here to here, yeah. And once we are done with this, once we add a reversal such as this, the price continue the trend, then we start with now join the candlesticks together from here, this swing point to this swing point to this reversal swing point, then to the upside. Then that's how we start picking the swing point. As you can see, we have one other swing point here. Yeah, we have this swing point. There's a reversal here also. We have another swing point from here to here. Then once price was done here, we have another, price broke this high, we have another swing point here. So basically that is all there is to. You first want to identify the highs and lows based on each candlestick. Then from there, once you have your reversal, then you match the candlestick together, making the structure. So basically we were able to identify a minus structure here. The low, high, low, and high. So that's all there is to it. If there's any question, anything you do not understand, please do well to put it out in the comment section. I will do well to explain further. Thank you. Through the short. Yeah, I'll do it to explain for that through the short. Thank you. I hope you guys understand. Bye. Yeah.